half an hour away from the market open in mainland China and here in Hong Kong. You're watching the China Show. We are live at the city's inaugural Women Chief Executive Summit. I'm Yvonne Man.
Yep, that's happening now. A bit of a flashback there from last week. I'm David Ingles. Good Monday morning to all of you. To continue that theme from last week, the White House says China will suspend some rare earth export controls and drop investigations targeting U.S. companies in the chip supply chain. Now, we're looking at gold today, dipping ever so slightly back below the 4,000 level here after China's move to end this long-standing tax rebate for some retailers. Oil, on the other hand, is rising after OPEC Plus announcing plans to pause output hikes going into next year. And also ahead, struggling Hong Kong developer New World set to issue almost $2 billion in new securities and notes as it seeks to improve its debt profile. And a lot of big interviews coming up here as Hong Kong kicks off an extremely busy week of conferences. Do not miss our exclusives coming up with top executives at HKEX, the UBS Global Wealth Management, and also Primavera Capital. Good Monday morning. Thank you for joining us. Hope you all had a restful weekend. The story, I think the main story going into the weekend, certainly as long as the plot lines are concerned, was really the strength in the U.S. dollar, which in a moment you'll really see how that's playing out as far as exchange rates go. Equity markets, we don't have Japan today, so volumes will be on the lighter side of things. The markets that are trading, though, are trading to the upside. Kospi index is a very good example of that. S&P futures seeing some decent upside, not normally seen for this time of the session here. We talked about gold. We'll get into the gold story in a moment. Dollar yen 154. Euro, we have a rate decision coming through this week out of the Bank of England. Have a look at that. Aussie dollar on your screens as well. Yeah, so the strength in the U.S. dollar did push dollar yen back above 154. We'll talk about an iteration of that as far as the Chinese exchange rate is concerned. Give or take, that's about the lowest. We're back to Feb levels there on dollar yen. Kospi index, you have Taiwan, you have Singapore coming online along with Malaysia. Equity markets, the snapshot is this, mostly upside. A lot of that right now is down to what's happening in Korea. There's a China angle to what's happening there, which we'll get to in a moment, given, of course, the fresh connection as far as relations between the two economies are concerned. The approach to the open, just keep in mind the backdrop here is a very big drop on Friday in Chinese tech, and it's looking like we're going to be offsetting some of that going into today. 180 is a level to watch. We dip below that on the 10-year yield, and of course, as the exchange rate goes, we're back above 712. There's a technical level to watch. More on that in a moment. Yvonne, let me bring you back in.
Yeah, it's getting loud here, Dave. We are live here at the Hong Kong Exchange, of course, for the inaugural WCE. You're just about to see, I think, Paul Chan, Financial Secretary, is making it on stage here as we kick off this event. Certainly, it's a busy one for Hong Kong. Just say I wouldn't miss it, right? I made a big dash from South Korea back to Hong Kong here, just given the events that are happening, not just today, right? So we talk about the Women's Chief Executive Summit. We have Hong Kong FinTech Week that's kicking off as well. Let's not forget HKEX. We're going to be live there as well this whole week. So certainly that's going to be a big thing to watch here. The Investment Leaders Summit there as well. So we're going to be talking to a lot of people. And here, when it comes to WCE, there's a great survey that came out, right? Breaking the glass ceiling. They're talking about 45% of the top financial sector roles actually go to women here in the city. And that certainly is a breakthrough for some of the women that we're about to talk to. The co-organizers of this event, Hong Kong Exchange's Bonnie Chan, as well as UBS's Amy Lowe, is going to be joining us in the next 2 hours to talk about this event. And certainly, it's not just that. We're talking about Hong Kong FinTech Week. Our very own Annabelle Jewelers is covering that from the Convention Center. Bell, what's going on?
Yeah, that's right. I mean, you're saying it's getting noisy there. It's just starting to fill in as well because, as you said, this is a major week for events here in Hong Kong. It's actually the 10th anniversary of the Hong Kong FinTech Week as well. So Hong Kong, of course, really making that push to be one of the global hubs for Web3 and crypto initiatives. But again, here today, we've got a very big interview lineup coming up. So we're going to be speaking with Fred Hu, for instance, from Primavera Capital. He's coming by in the next hour to talk about the outlook for PE, but also the outlook for US-China relations. That's a big focus. And then just ahead as well, we're going to be speaking with Dwayne Kwang from Chiming Ventures, and that is, of course, a VC fund, US dollar denominated, but looking to raise millions and millions of dollars of capital right now. So lots of big interviews ahead. These are exclusive, but you can see there Fred Hu joining us in the next hour.
Fantastic team. We'll be with you guys shortly once we have those interviews coming online. Of course, we have the team on the ground. Busy, extremely jam-packed week as far as conferences go here in Hong Kong. Bill there, of course, at FinTech Week. And in case you're wondering, Yvonne is, of course, she's at the Exchange as well there for some very big interviews coming up. In the meantime, though, let's get to the latest here as far as news goes. It's been, obviously, we're coming off a very, an extremely manic week in South Korea. Going into the weekend, the dust has settled. We now have more information, what was agreed on, what wasn't. The White House says, here's the thing, that China will effectively suspend the implementation of additional export controls on rare earth metals and also terminate these investigations targeting U.S. companies in the semiconductor supply chain. But Treasury Secretary Scott Bessent cautions that allies will still need to be wary.
Have cornered the market, and unfortunately, at times, they prove to be unreliable partners. I think, and I hope, after the agreement and the goodwill between President Xi and President Trump in Korea, that we can depend on them to be more reliable partners, and the rest of the world can depend on them. But we can't take that chance. We don't want to decouple with China, but we're going to have to de-risk.
Right, Min Lo, our China correspondent, is here with us on sets. We're getting more details on what the U.S. and China had agreed upon. What else do we know from this? There's a fact sheet, I think, that's out of the White House.
Yeah, the U.S. White House has released a fact sheet of what was agreed upon. And bear in mind, we only have the U.S. version of this. The Chinese side hasn't yet released their version. But according to the U.S., China is going to suspend these export controls on things like rare earths, antimony, graphite, gallium, germanium. And it's going to undo the measures that were imposed not just in October this year, but also April of this year and October of 2022. So that's a massive victory for U.S. national security. And aside from that, China is also going to end investigations into U.S. chips companies, including the likes of Qualcomm, NVIDIA, for example, suspending some of those countermeasures that they have imposed, both tariff and non-tariff measures, since March 4th. And this means those tariffs on U.S. agricultural goods are going to be lifted. They're stemming the flow of fentanyl into the U.S. in exchange for a lowering of the fentanyl-related tariffs by 10%. Purchase commitments on soybeans, 12 million metric tons this year, 25 million metric tons for the next 3 years. What are they getting in exchange? The U.S. is agreeing to suspend that 50% rule, meaning they're going to roll back the expansion of the rules around the entity list that had applied to the affiliates of companies, at least 50% owned by companies on the entity list. And aside from that, extension of that trade truce for another year. So what else is not discussed is the TikTok deal, right? The U.S. has a plan to divest that. We haven't gotten a formal approval from Beijing yet. And of course, Taiwan, Ukraine war, purchases of Russian oil, that wasn't really discussed at the trade talks.
Min, thank you so much for a wrap of what was discussed, agreed on, and of course some of the items that some people say were on the table, but obviously on the backside of that, not really. Maybe we'll get to that another time. Right. Okay, let's bring in our first guest on the show today, Tsinghua University Director and former PBOC advisor David Daokui Lee. He joins us from Beijing. Professor Lee, thank you so much for joining us. What a time to be speaking with you following that historic meeting last week between the two presidents. Just give us your top takeaway. What do you think how big of a success was it in your opinion?
I think among all the meetings between the two leaders, this one is perhaps the most important. It's really historical. Why? I think fundamentally the most important progress for both sides is for the U.S. to recognize China as an equal peer, as an equal partner to talk about things. So in fact, President Trump used the phrase of G2, which was used by President Obama many years ago. So this is a big progress. That means two implications. Number one, there will be bigger talks, not only on trade, but also on security issues, on Ukraine, on Taiwan Straits, on South China Sea and the Middle East between the two countries. And number two, trade issues, financial issues will be discussed. And in this big picture view, trade issues and the financial issues, technological issues are frankly speaking, small potatoes, and they will be resolved. So there is a sense of enthusiasm among my colleagues in Beijing. In fact, in a formal dinner gathering, that's the mood of top thinkers in China.
Professor, fantastic for laying out the context for us there. Some of the, I guess just to borrow maybe the analogy you used, most of the low-hanging fruit were discussed, the small potatoes, as you were pointing out. The next 12 months seems to be the sky's perhaps the limit for what they could be seeing progress on. Talk to us about those bigger items. What sort of progress do you think we should realistically expect when it comes to the likes of Ukraine, for example, or Taiwan?
Well, on the issue of Taiwan Straits, this is by far the most important issue or biggest concern of the Chinese side. So I think it is not unrealistic that under President Trump, the U.S. administration, as well as the whole U.S. Capitol Hill, make some new rhetoric about the Taiwan succession issue, which is the big concern of the Beijing side. And in return, the Beijing side will cooperate with the U.S. on the issues of Ukraine, will agree to be more proactive in pushing Russia, for example, to the negotiation table. And on Middle East, the China can play and will play a bigger role. So I think these are the big issues. And on trade and finance, the Chinese side can agree to buy right away massive amount of American agricultural products and crude oil. And also, I strongly believe China can even give zero tariff rates on Detroit manufactured automobile. Why not? Why not? China is ready for that. That way, the President Trump can claim victory domestically before the midterm. So it's really a very good meeting.
David, you highlight a very sort of optimistic sort of path forward for the two. I wanted to ask you about the fact that there was no mention of these sort of NVIDIA Blackwell chips. There was a lot of speculation leading up to this trip that Trump was going to bring this up to Xi Jinping. When it comes to tech supremacy and the like, do you think 1 year is enough for China to reduce that chokehold it has on U.S. semiconductors? And at the same time, can it actually be quicker than the U.S. breaking its dependency on China rare earths?
Well, the rare earth issue is actually tricky. It's more than a technological issue. It's an economic issue. That is whether the new startups, right? The startups in manufacturing, distilling rare earth in the U.S. or other countries will be economically profitable. Until you see that, it's hard to realistically find replacement of Chinese export of rare earth. The computer chip issue, I would give the Chinese at 5 years. If the current situation continues, if the U.S. continues to restrict its export of computer chips to China, I would say in 5 years. I mean, I believe I'm a bit conservative on this, on my estimates. 5 years, China will do it. Because look at it, the computer chips is based upon a technology which is not progressing very fast. 2 nanometer perhaps is the limit of the computer chip production. That's the limit. Okay, so China is chasing a fixed target rather than on AI. AI is a moving target. So I am optimistic that U.S. side, starting with Jensen Huang and NVIDIA top executives, know this very well. So the best strategy for the U.S. side is to relax its trade, its export of computer chips, therefore slowing down the incentives, lowering the incentives, and therefore slowing down the Chinese pace of catching up.
Yeah, and it goes with what we heard in that 14th five-year plan, David, of really trying to create China into this tech-driven industrial superpower. I wonder, that does come at a cost, right? That, the money that has been spent on subsidies and the like to really building that self-sufficiency within the tech sector comes at a cost of boosting consumption, for example. Do you think at some point the economy is going to have to pivot towards boosting consumption once again?
Financial Secretary?
Absolutely. Okay, I think right now, as it is, the top priority of top decision makers in China is the technological self-sufficiency. Okay, that comes to the area of security. But don't forget, the biggest economic security is sustainable and reasonably fast pace of economic growth. Because without reasonably fast pace of economic growth, the issue of youth unemployment, the issue of public finance, the issue of continued increase of disposable income, and therefore happiness of the population will be built on sand. So therefore, I think before too long, Chinese policies will be jacked up towards boosting domestic consumption. And talking about domestic consumption, there are millions of ways to do it. Economists like myself have been busy proposing various plans, and we are confident that down the road, all these proposals will be implemented one way or the other.
Okay, well, with this largely not completely out of the way, so we're talking about, of course, the negotiations with the U.S. side. David, I wonder then, what are the other major issues, foreign or domestic, economic or otherwise, that you think leadership now has more time to focus on? What are the big issues confronting China these days?
Well, in my mind, the biggest issue, which has not been widely recognized in the among the top circle, I think they will. Okay, is by far the local public debt, local government debt, which is huge by international standard, which is around 100% of GDP. However, if you put local government debt in the context of the whole Chinese economy, considering that the economy has a super high savings rates, and also the central government has very little amount of debt under its belt, only no more than 30% of GDP, and also considering that the central government has huge amount of financially valuable assets in the shares of the largest commercial banks and the mobile phone service providers and also conglomerates. So the issue of local government debt can be easily dealt with. I've been proposing the idea of increasing the issuance of central government debt in the amount of 50% of GDP, and use the money of the debt issuance to swap out local debt, and therefore giving local governments more life, giving them less burden of debt. Therefore, they can spend more. They can pay their delayed payments to construction companies, to their employees, and therefore the whole economy will be on a higher model of economic growth. By the way, if you look at the Chinese statistics very carefully, the Chinese economy is only running at 4.1% at nominal GDP rates. And this rate should be 7%, easily 7%, taking into account of inflation. The US nominal GDP rates easily is going around 5%. So it is nominal GDP growth rate, which is affecting everybody's life. It is not real GDP growth rate. Let's keep in mind.
We'll do, sir. Thank you so much for the insights. We covered pretty much everything. David Daokui there in Beijing, Tsinghua University director and former advisor to the PBOC. Thank you so much for the time. Get us warmed up this Monday. Very, very quickly, before we just go into a very short break, the reference rate of the day. You're looking at a currency right now on your screens. 708.67. That's still a fairly strong midpoint coming out of the PBOC. Just keep in mind, right, we're coming off 3 days of relatively strong moves in the U.S. dollar. We're going into today hitting our head on the 50-day moving average as far as dollar China is concerned. So this might pull us back a little bit and give us a little bit more breathing room from that edge. Right, cutting down to the open of trade, Shanghai, Shenzhen, and here in Hong Kong, just over 10 minutes away, futures are pointing slightly to the upside. Last we checked, this is the China Show. right, welcome back. We're looking at commodities markets early this Monday. So we talked about gold and the tax break there, and the news and the tax break in China. Oil, of course, and OPEC plus. In fact, let's bring in our oil reporter, Nicholas Lua from Singapore, for us to talk us through the logic behind the halt from OPEC. Nicholas.
Good morning. So the short version really is that OPEC is preserving its optionality as it moves into the end of the year and the start of next year. As it is, we've already added 137 barrels per day for the past 2 months and for the oncoming month in December. So there's a lot of supply at a time when demand is uncertain and there's plenty of supply. And so that's the uncertainty we're facing moving into next year. This is a way for OPEC to keep its options open as it navigates the uncertainty of Russian sanctions and all the other wildcards that could potentially hit oil markets.
All right, very quickly, what does this mean for this struggle for market share?
So, as you know, David, OPEC Plus has said that it's fighting for market share, and that's the logic governing its past big supply hikes. But at the same time, I think it's clear that not everyone has barrels to add. So Saudi Arabia still has barrels left to add, but its co-leader Russia, now a lot of its supply has been affected by all the Ukrainian drone strikes. And so that picture is a little uncertain. They're not giving up the fight. They're just being more cautious as we move into a period of lower demand. That's what the first quarter is traditionally known for.
Nicholas Lua, thank you so much. A wrap of OPEC and oil as we get started as far as this week is concerned. We're looking at futures right now, 26,000 on the Hang Seng Index, the first iteration of the week. Plenty more ahead. This is the China Show. Welcome back. Good morning. So you guys like nice round numbers, right? So 1.8% is the level that we dipped below that on the 10-year yields following that rally, of course, that's taking place. CGB market. New World out with some issuance here, maybe the rejigging of the maturity of its debt profile. We have massive events, of course, this week, as we talked about. We have the RatinDog PMI survey that's coming out in about 20 minutes or so. And within the sectors to watch today, casinos are doing well in the pre-market. Good data coming through. The opposite there are the likes of gold stocks, at Zijin Mining, Chow Tai Fook, names tied to the gold story. Seeing some pressure early after China, of course, ending that gold tax break and this pullback we're seeing in gold prices. Trendline support is in focus following that drop, and it's looking like we're going to get a bounce from that level today. This is the China Show. Good Monday morning. Welcome back. You're watching the China Show. In case you missed that, one of our first interviews of the day with Professor Daokui out of Beijing, interesting takeaway from him. He said the most important achievement or milestone from the meeting last week between the two presidents was that now it seems, when you look at China and the U.S., on equal footing, right? President Trump, G2. So it does open up the door, he says, for the two sides to discuss the bigger issues, Ukraine, Taiwan, over the next 12 months. And watch those two things over the next 12 months, apart from obviously other things of, taking the barriers down to trade and access to key markets and key technologies going into the Open today. We'll replay part of that interview later on if we do have some time. Going into the Open today, it's worth pointing out that it's going to be an extremely busy, again, conference week. Yvonne is at the exchange for us for an event. It's Hong Kong FinTech Week. Tomorrow, Yvonne and myself will be at the Hong Kong Monetary Authority's big event at the newly crowned best hotel in the world out of 22 properties. Okay, that's the Rosewood. We're looking at the CSI 300, as you can see, flat at the start of trade. Have a look at Hong Kong, please, if we can. And just keep in mind, right, a very big decline going into the weekend here. We are getting somewhat of a bounce, not completely to offset what we did get on Friday, 0.5%. Most of the big tech plays are moving toward the upside here. Xiaomi's getting a bit of upside at 2%, in case you missed it light bit of banter between President Xi and, of course, President Lee in Korea, giving him, of course, a Xiaomi phone. You can read about that on the internet if you do have access. Okay, let's have a look at where we are as far as casinos go. So back to data. Really good numbers coming out of Macau. As you can see, substantial gains out of the casino place right now going into the first session of the week. Gold plays in focus. You had the tax break being ended, the rebate, of course, and we are getting a decline across gold, spot and futures and equity market iterations of that coming up on your screens very, very shortly, including some of the ETFs traded in the onshore market. So last we checked, gold was right below the 4,000 handle. As expected, we are getting a pullback across some of the correlated names there. Very quickly, we'll look at this trading debut today. 100% last I checked. 98%? What is it doing now? Oh, okay. I'm sorry. Short change to that. 106% for mining lamp tech. This is a trading debut, of course, here in Hong Kong today. And this really ushers in almost a curtain raiser. Let me just pull that back a little bit as far as the big week of listings. So we talked about conferences, listings here is concerned. So you have this massive one taking place on Wednesday, and of course November 6th as well is a big day to watch. That Thursday where you have Pony AI and WeRide. You have pricing tomorrow for those two, and of course the trading debut itself coming through on Thursday. And just finally, just a quick glance at really how blockbuster this year has really been. Check out these numbers. Nearly 80 listings. Obviously going to get more as we enter the last 2 months of the year. Nearly 30 billion in funds raised, and turnover has picked up. And a lot of that, by the way, has come down in the form of the Stock Connect, 260 billion, the Hong Kong dollar. So it's quite a significant milestone, Yvonne, for the HKEX. I wonder what they say about this. Yvonne.
70%, right?
Yeah, and they are also one of the co-organizers of the inaugural Women Chief Executive Summit that is underway here in Hong Kong. And I'm pleased to bring in Bonnie Lachan here, Hong Kong Exchange CEO, as we're talking about, right? Nearly $28 billion in terms of total proceeds this year. That's on track for one of the best years we've seen since 2021 for the city, Bonnie. 300 sort of IPOs in the pipeline right now.
Yeah, it's actually more than 300. We also have the confidential filing, which is not covered by that number yet.
How are you dealing with the amount of paperwork, I'm guessing? Do you have enough manpower right now dealing with these applications?
We do. In fact, I'm quite pleased, and certainly I thank my team for keeping up that spirit and the momentum. We are increasingly trying to find ways to empower the team with technology. And in fact, we have been exploring, for example, the use of AI to help speed things up. But so far, I think, the momentum has been great. And we are now at over 80 completed IPOs. And we're in early November. So let's see what number we can wrap up the year with.
That's a lot of gong ceremonies, obviously, this year, Bonnie, for you. But when it comes to, once we get another, wave of these IPOs, again, we're talking about 300 in the pipeline. Are you concerned that a big chunk of that money is going to be taken away from the equity market?
Sorry.
Are you concerned that the liquidity issue, that there's going to be a big chunk of money that's being taken away from the equity market?
I see. Not at all. In fact, what is really pleasing this year, it's a return of international investors. So if I look at the IPOs which have been done to date, many deals we are seeing over half, and in fact some deals are even close to the 70-80% mark, representing international investors returning to the Hong Kong IPO market in earnest. So, so long, I'm personally very confident that so long as we're able to present investors around the world with the right opportunities, the money will come.
Yeah, I just came back from South Korea. You just came back from Saudi, so certainly we have a lot of takeaways from both these trips. But the fact that the U.S. and China have reached a truce for 1 year, what does that mean for Hong Kong in terms of the outlook now?
Yeah. Well, I think if you dial the clock back 3 weeks ago, people were actually worried that maybe the leaders are not going to meet at all, which obviously turned out to be not the case. And I guess, what I focus on at HKEX is really to make sure that regardless of market conditions, and, these trade talks and, the geopolitical situation, we provide the investors around the world with a resilient market, an orderly market that they can trade in and out. I think, with the talks continuing, it's a truce for now, like you said, things will pick up again. Hopefully, we continue to have that, very trusted market so that regardless of how investors want to take their position, they can trade.
I think at the height of things when we're quite tense, there was this threat of Chinese companies being delisted in the U.S. And maybe people were hoping that Hong Kong would be that place that they could seek some refuge and the like. There was a bit of pressure earlier on this year about easing these so-called dual-class shares and that the need to kind of prioritize that. Is there less of a need and urgency now, given now that we're in a truce?
Well, I think the way you put it, the focus seemed to be on the push factor, right? Because, companies are worried about delisting risk. I tend to focus on the pull factors, the attraction that Hong Kong is capable of providing, which is, first of all, right, the access to global capital. But more importantly, and that's our secret weapon, as you know, is the Connect franchise, whereby companies listed on our exchange is capable to tap the very strong southbound flow of capital from the Chinese mainland. That sets us apart from other exchanges. So I think, and you have seen, obviously, the southbound volume since the beginning of the year has stayed very, very strong. And so I would say that, regardless of the geopolitical situation and whether or not these threats are real or not, I do trust that, the Hong Kong is able to present a set of pull factors whereby companies will really see the merit of getting a listing on the Hong Kong market.
Are companies willing to alter their company structures just to fit the city's limits, though? I mean, are you seeing that?
Well, I guess, for that particular issue, companies will have to think about their own needs. And frankly, for corporate governance matters, shareholders have a say, right? Whether or not they're willing to accept a particular kind of company structure, or whether they would like to see, more, a company where, shareholders have a more equitable say. I think it is for the investors and the companies involved to decide for themselves. Now, on our part, we have introduced weighted voting rights since 2018, which is now 7 years ago. I guess, through our interaction with a lot of market participants, we do believe that maybe that's something that we can revisit and see how, we can continue to improve our listing regime, just like how we have done in other areas.
Okay, so there are conversations now in terms of possibly reviewing this?
Yeah,
or
I think,
early stages right now?
I think over the past, when we engage the market on various topics, this is one area where they have, mentioned that, they would like to see perhaps some revisiting.
There's also the latest rules in IPO allotment mechanism.
Yes.
Which some had said it makes it almost impossible for retail investors to get a share of these IPOs. And really the dry sort of supply kicks these IPO prices quite high as well. And I think the SFC has talked about we need to address this. How are you looking at this sort of issue?
Well, the purpose of that exercise, or the revision to that rule, was really to come out with what we believe a better price discovery mechanism. Now, we know that in an IPO, in the context of an IPO, retail investors are mostly price takers, and we really wanted to give the issuers who are listing their company, as well as institutional investors, a stronger bargaining power, so that through that bargaining, hopefully we will come up with a better price, which will be longer term sustainable. Now, obviously very difficult to draw sort of a causal relationship between the two. But I would say since the introduction of the new allocation rules, the aftermarket performance of the IPOs have actually fared quite well. So we will continue to monitor. But I would say that at least for now, what we set out to do, we believe we have achieved.
Okay, of course, it's the inaugural woman chief executive, so we can't leave without asking you a question about diversity and this sort of survey that came out, where 45% of top financial sector roles go to women here in the city. That's quite a milestone in itself. What do you think is still needed to do? What's your next sort of aim?
Right.
when it comes to diversity.
Yeah,
now.
I think, as a member of the WCA, I'm extremely pleased to see the results of the report. It is a very good set of data. And I think in Hong Kong, there is still a lot to do. As you know, HKEX is one of the first exchanges, global exchanges around the world to introduce a mandatory ban to single gender. That was 2 years ago. And so, I'm very pleased at the beginning of the journey, we still had 800 out of 2,600 listed companies with a single gender board. Now that's basically eradicated. What I think we still need to do more is to build the pipeline, the female directorship pipeline. Occasionally I hear that, people, you mentioned that, when they go out and try to fill board seats with women, they're not seeing that, churn in sort of great momentum yet. But I'm confident as we continue to bring more directors, more female directors into listed company boards, the churn will begin. And I think that is another big step forward in terms of promoting gender diversity in Hong Kong.
Bonnie, it's great to have you as always. Bonnie Chan there, Hong Kong Exchange CEO, joining us here at the Hong Kong Exchange. Of course, as we've been talking about, we're going to have more executives from the Women Chief Executive Summit in Hong Kong later on the show. We speak exclusively with the boss of UBS's Hong Kong and the bank's Global Wealth Management Asia Chair, Amy Loh. She's also one of the co-organizers of the event. Dave.
Yeah, absolutely. Stay tuned for that. And, of course, the conversations Yvonne has there at the event. Now, speaking of, let me just borrow that phonetic, low, and take a look at what's happening in the Philippines. We're reaching the lowest level here going back to 2022 on the Philippine Composite. We're now, Philippine Stock Exchange Index there. So we're down the most since Liberation Week, first week of April. And we are extremely close. I'll show you a chart in a moment here. Extremely close to falling to the lowest levels last seen during the pandemic. Big miners and some of the big financials leading these declines. Just about everything is down with the exception of less than a handful of names in Manila. And here's the chart for you guys. Yellow line is the one you want to watch. That's the trough in 2022. As you can see, we're very close to taking out, I think that was September of 2022. Below that, we're back to levels last seen during 2020, during the pandemic. Plenty more ahead. This is the China Show. All right, welcome back. You're watching the China Show. So the conversations around. So here's the thing. The dollar was not supposed to be one of the main events last week. It then became one of the key components of this market. Following the repricing, so you had a Fed decision, you had the press briefing from Jay Powell, who effectively said December is far from a done deal. Bond markets had to reprice that. The dollar is on 3 days of fairly decent strength. And the probability for December has gone from over 100%, so that's more than a 25, and then some more, down to about 65 to currently 70% based on, I think this is Fed fund futures, not swaps. There we go. So how do we look at this, given the data that we have, or the lack of it, if you think about it that way, following also the conversations we had last week between the U.S. and China, and how this opens up, maybe removes a level or two of uncertainty given the economic outlook. Joining us here on sets, Randy Kroszner, professor of economics at the University of Chicago Booth School of Business. You might also know him from his previous time at the Fed. Nice to see you. Good morning.
Great to be back.
So let's start with the Fed. The lack of data, official data, there's a shutdown that's taking place. I wonder how that affects decision-making dynamics, given the uncertainty out there.
Yeah, it makes it much more difficult to sort of come to consensus because the data aren't there. So people can say, well, I think the trend from what we saw a few months ago is still continuing, let's say like weakening of the labor market, or other people could say, no, I'm seeing anecdotes that's saying that it's not. So it's much more difficult. Unfortunately, what this means is they have to kind of go by vibe rather than data. They always used to talk about being data dependent, now they're kind of vibe dependent.
Right. Well, that applies more to dating than it does really monetary policy decisions if you think about it, when you try to look for the vibe. So what do you think happens in December? Is the best course of action to do nothing? Or is an insurance cut perhaps more a wiser option?
Well, hopefully we'll get some data by then. I really hope that we might be able to, they should be able to backfill in things like the employment numbers,
right.
Or at least some of the employment numbers. Probably we'll just miss the inflation numbers, but hopefully we'll have another round of inflation numbers. And then that's really what they should be looking at. Right now it's really tough to tell because it really is down to, well, what are the anecdotes? Certainly we're starting to see more anecdotal reports of layoffs, of job reduction. So that suggests that the trend that we were seeing from the last data, the official data that we got, may be continuing weakness in the job market.
Right. It doesn't seem, though, that we're about to turn a sharp corner in the U.S. economy. The fact that there is healthy debate that you could make the argument, a strong argument either way. How low do you think rates can or should get in this cycle?
That's always that's a very important, very, very important issue. And so, the Fed has moved its assessment of where that kind of long-run neutral rate would be, when it's neither expansionary nor contractionary. And so, I think they think that well, there's obviously a difference of opinion from the reports that they put out, but I would say sort of it'll get into the low to mid threes is kind of probably where they would end up, but that's really dependent on so many different factors that we just don't have the data on now.
Right. The issue of Fed independence. Where's your head at that at the moment? Just given how you've seen voting, of course, taking place, and where do you think that conversation goes?
So I think the Fed is still doing what it thinks is right. I think Jay Powell is in charge.
For the economy?
Yeah.
Okay.
Yeah, and I think Jay Powell's clearly in charge. I mean, obviously, in this most recent round, you had a dissent on both sides. One who wanted to raise rates, keep rates steady. Another who wanted to cut rates more. I think that's perfectly reasonable. I think that's healthy to have people have expressed their different points of view. But I think Jay's still running it calling it as he sees it.
Right.
And I think it was reasonable for him to say, I can't make any commitments about December because I don't have any data.
Okay, well, that's fair. Unless he's going on vibe, right? Okay. There's been a substantial amount of progress on tariffs. But also we've had substantial amount of tariffs already put in place. When do you think we'll get that passed through as far as inflation goes, or do you think the companies will take that hit?
Well, see, it's just even if you had a full 20% increase in tariffs, imports are only 14% of U.S. GDP.
Okay.
So 20% of 14% is 2.8%. So assuming that no one shifts to cheaper products, which of course people do, the maximum impact is going to be 2.8% on the level. And we're not seeing a trade war breakout, so that's sort of a one-time, one-off kind of thing. This is something that Chris Waller, one of the governors, has been talking about for a long time. I've been talking about this since the beginning of the year. And so that's why I don't think that the tariffs in and of themselves are going to have a very big long-term impact on inflation. Certainly, we're seeing that, we had this glide path down, now it's kind of flattened out because you're having some impact of the tariffs, but not an enormous impact.
I want to get your thoughts on this. There's a extended pause between the discussions with the U.S. and China. It looks like they'll be revisiting that next year, and it's possible that they could be doing this at a cadence of 12 months. In other words, every 12 months they negotiate terms. Do you think that adds a level of uncertainty for businesses, or do you think this is the sort of best new normal that we're going to get?
Well, I think obviously in April, markets were kind of freaked out about what was going on with respect to tariffs and dealing with a lot of uncertainty. It now seems that when there are different announcements, there'll be some movement in the markets, but they don't seem to be nearly as tumultuous as they were before. So I think business people are just getting used to this kind of baseline level of policy uncertainty being higher than it was before. But it took a while for them to get used to it.
Right. Since you're in this part of the world, I want to get your thoughts on the Chinese economy. Just a broad question here. They've had some challenges trying to get inflation up and about.
Yes.
Is there something that you think they should be doing more of, or something new that they should be endeavoring? Or do you think it's just a matter, have we just not waited long enough, I guess, for things to bear fruit?
Well, I think there are uncertainties about the tariff impacts and trade impacts on the Chinese economy. So I think they're a little bit of wait-and-see mode to see how those sorts of things work out. There's obviously some uncertainty about domestic demand, although that seems to be coming back a bit. And I think the People's Bank really hasn't changed interest rates or reserve requirements since May. And so I think, they should be looking to see if we're continuing to see some downward pressure, maybe they need to do further cuts. But right now, the economy seems to be okay. And so I think they're kind of in a wait-and-see mode, partly because of the trade issues.
Right, with good reason. Randy, it's very nice to see you. Have a great rest of your trip here in Hong Kong. Give your students a hard time, please, for me, right? Okay, fantastic. Randy Kroszner, their former Fed governor, of course, he's in town here for the University of Chicago. He has some classes to get through. All right, there's plenty more here on the China Show. Market update is coming through in a couple of minutes. Good Monday morning to all of you. Right, welcome back. Just very quickly, we're getting some data coming through. This is the private PMI survey. This is obviously for October. Following the miss on the official numbers, this one actually coming in not as far from estimates, the median estimate, but it's worth pointing out there was no mode given that there were individual forecasts all over the place. 50.7 is basically the quote-unquote benchmark here. All right, we'll leave that there for now. A brief look at some of the movers across these markets. We're looking at autos coming up on your screens. There we go. Not a lot of movement there. Massive trading debut today. Last we checked, 107% on mining lamp tech. That's the debut here in Hong Kong. Ooh, 4 percentage points better. And a look at the benchmarks going into the first 25 minutes of trades. Volumes are largely on the lighter side of things across the region. Japan cash markets are, of course, shut. We're mixed across A and H shares. Plenty more ahead. You're watching The China Show.
Welcome back to The China Show. If you hear that's getting loud, well, yeah, it's going to get very loud the next few days here in Hong Kong. A busy week of events here. We just came off, I'm coming on the plane in Busan and in Gyeongju in South Korea after those Trump-Xi talks. And now we're really talking about the state of financial markets and, of course, the financial hub of Hong Kong here this week, Dave. So certainly we're right here live at the Hong Kong Exchange for the Women Chief Executive Summit, the inaugural event today. We're also heading to FinTech Week there as the things kick off there as well, Dave.
Yeah, you have a lot of big conversations coming up. In fact, with Yvonne in a couple of minutes, or Amy Lowe will be joining her there at the HKEX, and then she hurries off from there to the FinTech Summit. It's been exactly a week since we launched the new set. The only thing that so far has not been a feature of the new set is my co-anchor, Yvonne, who's been here for about a day and then ditched us to do other better things. But I promise you maybe we'll get Yvonne back here on set with us in a couple of days. There we go. Not tomorrow, though, because as Yvonne is pointing out, there's another big event taking place. It's the HKMA Financial Leader Summit, where, including myself, will be ditching the set and headed to the world's #1 hotel out of 22. That's the Rosewood, of course. That's where things are taking place tomorrow. Anyway, let's have a look at where we are market-wise. So as we were pointing out, and Yvonne was just mentioning there, we're coming off lows today on the Hang Seng Index. We're slightly higher there. We're coming off quite some steep declines on Friday. Two other market stories today in the equity markets. One is Korea and this massive K-pop we're seeing there, pun intended, but also quite literally because of what's taking place in that space. And the Philippines is off about 2%. We're coming off lows of the session, but massive gap lower there. That could be still down to this confidence crisis around what's been going on there with the flood control projects. We'll try and figure out what's going on there. But at these levels, we are at risk of falling to the lowest levels last seen during Rona. Okay, let's have a look at gold and gold-related stocks coming off, and quite substantially. There we go. Everything from miners to some of the jewelers. So a lot of the ETFs following the rebates, China ending the tax rebate on gold. So it's playing out across these markets. And casinos are going the opposite way, following some decent numbers coming out of Macau, above expectations. And casinos, last we checked, are actually doing very, very well in the first session, with the exception of Galaxy, which is coming off. But yeah, some of these names are also punching above the benchmark today. Yvonne.
Yeah, let's continue our coverage here at the inaugural Women's Chief Executive Summit here in Hong Kong. And we're talking about little wealth management and the like, private wealth. It's quite interesting as well. Our very own Sharni Wong from Bloomberg Intelligence was crunching the numbers, and they were talking about private wealth under management could nearly double to 2.6 trillion by 2031. And Hong Kong could actually surpass the likes of Switzerland in being the global cross-border center this year. Let's bring in Amy Lowe. She knows a little bit more about that. She is the UBS Global Wealth Management Asia Chairman. She's also the UBS Hong Kong Head and Chief Executive. She's also a co-organizer of WCE. So you wear many, many hats, Amy. Thank you so much for joining us.
Oh, thank you so much, Yvonne, for having me here.
Let's talk a little bit more about inflows, right? Asia Pac was very strong in the third quarter. How much was that contributed by Hong Kong and China?
Oh, actually, we had, if you look at the third quarter result announcement, we have a very strong quarter. Globally, we surpassed the $6.9 trillion. As you said, Asia Pacific is one of the main contributors. We surpassed at the group level for Asia Pacific 1 trillion asset, and for wealth management is over $870 billion, and the net new asset is $37 billion.
Wow.
So a very strong inflow.
How much did that come from the mainland side of the business?
It's quite diverse from different parts of the Asia-Pacific region. Obviously, China remains to be the fastest growth region and the wealth creation region as well.
Yeah, I mean, certainly the Chinese market, this stock rally has been a standout this year. Are your clients still willing to raise their exposure in this market still?
Definitely, because other than the AUM, we also have a record trading volume. And as a result, also record trading kind of revenue as well. And I think, obviously, with the capital market activity picking up, we have also seen the sentiment change. And clients want to further increase the allocation to both China as well as US. And that also synchronized and echoes very well our CIO view. Geographically, we like China and also US. US because, with the rate cut and also the AI topic and also the announcement, the result announcement so far has been quite positive. And China, obviously, is driven by the tech sector. So we have seen increasing interest in also allocating more into the Asia-Pacific region.
What sort of risk tolerance do clients have now? I mean, after we've already seen records hit in a lot of equity markets, the ones that you just highlighted there as well. Are they willing to lean more into risk? And what asset classes?
Yeah, if we talk to a client, obviously diversification is the key, and how you diversify across the different asset classes, jurisdiction, and that's the reason why, in addition to the trading kind of activity, they are also interested in alternative. Gold remains to be also one of the very popular asset class.
Yeah. Is that still a defensive sort of play, or do you think? I mean, it seems like sometimes gold acts as a risky asset these days too. Now.
I think it's a little bit different because now they use it as also a diversifier into the different asset classes. And so they also take the advantage of the correction to also add in some of the gold position. And the central banks are still buying, though.
When it comes to the momentum, though, do you see signs that the strong inflow can continue in terms of sustainability of it all, or do you think that there's some sort of let up in sight?
Oh, if you look at SFC number, they just also announced the number for Hong Kong. We have also seen the AUM growth last year, 13%. And if you look at the net inflow, it surged by 81%. So we have seen also strong inflow into the Hong Kong, both asset and wealth management. And, I chair the Hong Kong Private Wealth Management Association. The fact that we have also 50% growth in our corporate membership speak for itself.
Sounds like you need more people. Are you looking to hire more people when it comes to catering to that whole sort of wealth that you're seeing in Hong Kong and mainland China too?
We've been hiring, and our GAP and also the board were in Hong Kong, and certainly they were very impressed by the franchise that we have built. And obviously, we will continue to hire strategically out in the region.
How much could headcount grow, you think, in the region now?
I think just for Hong Kong, we hire over 50 bankers for this year so far.
Do you have any targets in terms of what
we
you would
will
like
continue,
to...
as I said, we will continue to hire strategically.
I was going to ask you a little bit more about Singapore, too, because UBS obviously was among some of those banks that got caught in this money laundering scandal a few years ago. What's the bank doing to really streamline this whole process of vetting for new clients now as you move forward from this?
Oh, I think for us in Asia Pacific, both Hong Kong and Singapore are important hubs. And obviously, we also comply with all the kind of onboarding requirement, the due diligence, no matter in Hong Kong, Singapore, or in any other location in the Asia Pacific region. And I think that's also the reason why we have to leverage on AI and technology to streamline some of this onboarding and doing due diligence. And it has been working on very well because at UBS, we also built the AI factory to make onboarding, investment suitability, and also the client conversational insights more seamless.
Yeah. Has it hurt the whole reputation of Singapore as a safe place for Chinese wealth to park at? Do you think that sort of image has changed or lost a bit of its shine here, or do you still see new wealth coming to the city there?
As I said, both Hong Kong and Singapore are an important hub, and we have also seen both growth in Hong Kong and Singapore, plus other geographic, other Asian market, because other than Hong Kong and Singapore, we are also growing some of the established market like Japan, Australia, Taiwan, because Taiwan, they have also piloted the Kaohsiung Asset and Wealth Management Hub, and that's exciting.
Yes, this whole new wealth there,
Yeah, actually we have also a very strong Asia Pacific wealth management team in Switzerland. And we have also seen a very, very strong kind of growth out there as well. So as I said, clients are also looking for diversification. So it's how are we going to use Hong Kong and Singapore as the important hub, and then continue to grow the established market, Japan, Australia, and also Taiwan, and Switzerland being our hometown. Home market, and also growing the long-term market like China, India.
I was going to ask you about Taiwan. I was just there, and there's so much potential. They talk about it becoming like given all these tech companies that have basically accumulated a lot of wealth, and they want to keep it on shore. But there's higher taxes there. It might be hard to retain talent because salaries are not as competitive to Hong Kong and Singapore. What do you think is sort of the potential for Taiwan to be that sort of wealth?
Yeah, as I said, while they are now piloting the asset and wealth management hub in Kaohsiung, I think that's a very positive sign. So talking to some of our stakeholders and different partners, like some of the asset and wealth management players, they are also considering increasing their kind of
Are you putting more people in Taiwan now too?
In Taiwan? We have a strong team in Taiwan because in addition to the international market, we also have a strong domestic wealth management team down in Taiwan, and certainly we will expand in Taiwan.
Okay. I was going to ask you, since you're the co-organizer, you said this is your baby, this event, the WCE. Tell us a bit more about, the survey, right? 45% of top financial roles in the industry are going to women. Why Hong Kong, and why such a high number? It certainly is a bit of a milestone.
If you look at the results, primarily the respondents were telling us it's because of the safety in Hong Kong, the education, as well as the culture that encourage them to lead and also be inspired. And I think the diversity here is not forced, but it's organic. And having such a strong, powerful women network, over 60 women, collaborating together to really drive the efficacy, and also we mentor a lot of the young talent. I think that's the kind of culture we have built that make it so strong.
What's the next thing you still want to conquer then? When it comes to diversity?
I think we are still also encouraging and promoting public and private leadership in this space, and how we can really position Hong Kong as the global benchmark for gender diverse kind of financial center.
I was going to say, it's a big week for Hong Kong. We were talking about all the events happening here. Does this week feel a bit different from previous years? This whole resurgence in Hong Kong, do you see that it can continue?
Oh, yeah, definitely. Because this week you have the FinTech week, then the Hong Kong MA Leaders Summit, and the Private Wealth Management Association Summit.
Yeah.
We also will be welcoming 1,200 participants from all over the world to Hong Kong. So I'm sure the momentum will continue. And Hong Kong is a capital market hub. The fact that we have 300 companies lining up to list. And that's exciting. I think the numbers speak for itself. That's why I told you we have also record kind of trading volume and also the activity out here in Hong Kong.
Do you see a risk to this resurgence in any way?
Obviously, the geopolitical tension, the tariff, but I think it's in the midst of all this geopolitical tension and also the tariff, we still have such a strong kind of inflow. The numbers speak for itself.
Amy, it's great to have you back.
Thank you
Amy
so
Lowe
much,
there,
Yvonne.
UBS Global Wealth Management Asia Chairman, and of course the UBS Hong Kong Head and Chief Executive, joining us here at the WCE event. And of course, if you're a subscriber and want to rewatch that interview, you can watch through our interactive TV function, TV Go. You can also become part of the conversation, send us in some messages or questions to our guests throughout the shows. Check it out at TV Go. Thank you.
Right, so another big event here in Hong Kong, and we're live at day one of FinTech Week, and we'll be speaking exclusively with Fred Hu, CEO of private equity firm Primavera Capital. In a couple of minutes, we'll get his take really on that meeting between President Trump and President Xi, as well as China's recently concluded fourth plenum. This is The China Show. Good morning. Welcome back. You're watching The China Show, the Monday edition. And, Fred Hu will be joining us at those times in case you missed the earlier promo. Cash markets, we don't have Japan today, so we're shut there, so you don't have cash treasuries. We do have, of course, futures trading and fairly uneventful equity market session, with the exception of two markets. One is Korea. We'll get to that in a moment. The other one is the Philippines, which is, in fact, the sell-off there is just getting worse as I speak. We'll have a look at the Philippines later on. In the meantime, let's bring in Mark Cranfield for some market context as far as today is concerned, MLive strategist out of Singapore. Mark, good morning. Talk to us about Korea. What's not that that's a new story in markets, best performing market this year, but what's going on today?
Yeah, good morning. Who needs Japan when you've got the Kospi firing away as it is? I mean, it's we just had a chart up on Markets Live. You might be able to see it. We're even closing in on the rebound just after the COVID crisis in 2020. I mean, that was a more than 100% bottom to top gain for the Kospi. They're up above 80% already for this one. So this is an extraordinary performance since Liberation Day in April, when the markets really tanked. And we were joking about it during the break there, but it's almost as though the whole Kospi index has become an AI index. You've even got companies like Hyundai, an old school company, even they are getting involved in the AI boom with the help of NVIDIA. Of course, they've signed a deal with them to do some work on AI-related factories for mobility with the Korean government. So there seems to be the whole country is encompassing the theme about AI, which has been driving equity markets for most of this year, and looks as though it's going to continue to do so. Just anecdotally, over the weekend, I was speaking to some friends in the fund management industry, and they're all very concerned that we're in a bubble and they're worried about valuations, but none of them are selling their stocks. They're all holding on. So it just gives you an example that people, yes, they see some of these numbers, they think they're a bit ridiculous, could be getting overdone, but nobody for the moment wants to take the risk of being left out just in case the markets go even further between now and year end.
Yeah, the difference between what you think and what you do. I mean, everyone, at least almost everyone I know, thinks that, that last shot of tequila at 3 a.m. is a bad idea, but, most people will still take that last shot. Mark, how do I look at the strong dollar today, 3 days? Are we done repricing this, the December cut around the Fed, that it's probably not going to happen? How do I need to be thinking about that now this week?
I think that picture is being complicated simply by the yen. So the Fed story for December or not is going to play out really with the Fed speaker. We're going to have a slew of Fed speakers coming up in the next couple of weeks. Now that they're able to talk freely again, and you'll probably see quite a few contradicting the stance of Jerome Powell. The fact that he pushed back on December is not going to be what all of the Feds be. You're going to have people like Williams, probably Waller as well. I mean, they're going to have their own views, and they're likely to be a lot more dovish than you heard from Jerome Powell. So in terms of what we see for December, there's going to be a lot of to and fro between now, and you've got plenty of time to reprice between now and the December meeting. On the other side, you've very much got a yen story, which is not going to go away for some time yet. The fact that the dollar yen is continuing to climb, we're getting towards territory where the Japanese authorities will get more concerned. But if you look at where we've been, we almost reached 159 at the beginning of the year. That's a possibility for intervention, but more likely they're going to wait until 160 plus, simply because for the moment, the Bank of Japan is not doing its part. This is a two-sided equation. For the Japanese yen to stabilize, maybe even to get stronger, the Ministry of Finance and the Bank of Japan need to be on the same page. They need to be working together. That's what we've seen in the past. That can change the direction of the currency when they're both working to support that. That is not the case right now. And the Bank of Japan really dropped the ball last week. They had an opportunity to set up December for an interest rate hike. They did not do so. Market is very skeptical that they're even going to be able to raise interest rates until well into 2026. That's really not helpful for the Japanese currency, which is already suffering because of seriously big negative real interest rates. It's one of the worst cases among the G10 countries. And because of that, the yen becomes a funding currency again. So the story for the yen will help to support the US dollar by product of the fact that people see a fairly directional move there. And so, of course, they won't want to short the US dollar too much against other currencies as long as the yen is heading in one direction.
Mark, just a final quick thought on gold and, the headline, China ending its, tax rebate for some retailers. It's obviously costing some equity market declines in the onshore space. But how do we need to be thinking about that? Is there a day two there, or is that just sort of bad news as expected today?
It's good for a knee-jerk reaction. In the big scheme of things, it doesn't really mean a great deal. Gold was coming off anyway. People who wanted to short gold in the near term probably using it as a good excuse. But in terms of the big picture, where central banks are buying, whether there's long-term retail investing, all of those things will be in place. But in the very near term, of course, gold was getting very overextended, and it's not surprising that it's selling off a little bit.
Mark, thank you, sir. Mark Cranfield in Singapore for us. Just a note on these markets in Manila. So we're barely an hour into the session. Man, what a session that's been so far here, as you can see over my right shoulder. So we're down about 2.3 now. We were coming off lows at one point about 15 minutes ago and have since re-accelerated that drop here. So we're now at the lowest since 2022, and we're very close now to taking out the low that we hit back that year. Below that, we're back to levels last seen during the depths of the pandemic back in 2020. Quick glance at the biggest movers there. Everything with the exception of one or two major constituents on the Philippine composite are down, and just some of the big names there, everything from San Miguel to BDO Unibank. Plenty more ahead. This is The China Show. Good morning. Right, welcome back. In some corporate news we're tracking this morning, the U.S. says Beijing will take steps to allow the Chinese facilities of chipmaker Nexperia to resume shipments. That's confirming a Bloomberg report from a day earlier. Now, the company is a Dutch semiconductor firm with facilities in China, and the move is expected to ease worries among auto manufacturers over in Europe. Now, the Australian lender Westpac reported profit in line with estimates. That's thanks to growth in mortgages and also some loans to businesses. CEO Anthony Miller has worked to overhaul the lender since taking over back in December, now reshuffling senior management and cutting jobs to reduce costs. Now, Westpac also sold its Rams mortgage portfolio to a group including KKR, a move Miller says further simplifies the bank. Now, Berkshire Hathaway, massive one over the weekend. Cash pile surging to get this. We're near that 400 billion mark, aren't we? $382 billion. That's the latest quarter. As earnings also jumped at, of course, the conglomerate of the Oracle from Omaha. The firm's cash hoard grew as Mr. Buffett there avoided deals during the quarter. We all talked about valuations being on the heftier side of things. The insurance underwriting profit more than tripled. Berkshire declined to buy back shares for a fifth straight quarter, and the stock has tumbled almost 12% since, of course, Buffett said in May that he would be stepping down. Right, let's stay on the earnings theme. So I would say we're wrapping up the bulk of earnings, although the bulk of the big ones are still ahead. So we're about 80%, a little over 80% through earnings season at MSCI China. You still have the reason I alluded to the big ones. Of course, you have the big tech names still on deck the next few weeks or so. So far, it's been largely disappointing on both revenues and profits. On deck this week, you have Hua Hong Semi and Yum China set to report earnings these next few days or so. Plenty more ahead. This is the China Show. Good morning. So this is the time of the day when we should be heading to the Japanese lunch break. Things were on holiday over in Tokyo for Culture Day. There we go. All that is to say no cash markets, although you do have some proxies, of course. Futures contracts are trending to the downside. We're not feeling the weak yen effects. We could get that, of course, later on in the week when things reopen. And as you can see, dollar yen, in fact, a better look at dollar yen right now, all on a year-to-date basis. We're now back to levels last seen in Feb. So who would have thought we'd be back above 154? The dollar strength that's come through and the repricing around number one, the Fed, and literally the other side of that exchange rate is the yen around the BOC, and no guidance as far as December goes. So we're actually moving into the situation where possible, maybe not likely, but possibly the Fed and the BOJ will no longer move for the year. There we go. Dollar yen sitting at 154, lowest level here since Feb. Let's get it back now to this big event week here in Hong Kong. You have FinTech Week for one, and our tech correspondent Annabelle is there for us, standing by with her next guest. Belle.
Thanks, Dave. Yeah, I'm joined this morning by the Group Chairman and CEO of Primavera Capital. That's Fred Hu, of course. So, Fred, great to see you again on Bloomberg TV. We can start, I think, with US-China. We'll get to the tech side, the FinTech side in a moment. But we did as well have the talks between President Xi and Trump last week. So I'm curious for your views on the outcomes from Busan and whether you were encouraged at all by what we heard.
Well, I think the summit was successful. That both leaders have been able to put the bilateral relationship back on track with some stability and preventing otherwise a very disastrous outcome for both countries and for the world economy at large. So I think the trade truce reached by the two leaders, by two countries, I think is really a great reassurance for global markets and for global economy.
How do you see it developing? Because obviously there's big points of contention between both sides. It's difficult to really see how they'll be able to see eye to eye on areas, for instance, like rare earths, which remains a big bargaining chip for China. What do you think is the next step and the evolution of the relationship from here?
Well, I think just the experience of last couple of months, has told us, like it or not, the two economies are still highly dependent on each other, and in fact, the world economy is still highly wide, to be interdependent. So, if you want to penalize a trading partner, whether it's by high tariff or export control, yes, you exact the cost on your partner, but you inflict a lot of harm to your own economy. Like this whole entanglement with whether it's chip restriction or rare earth curve, right? Told us very, very clearly. So I hopefully now with the truce in place, that give the time, give the more cool down emotion and the space for both governments to really engage and step back, say, where we want to resolve some of the differences. Okay, some are maybe long-standing, but where we should continue cooperation, like trade or investment or technology, right? Because it's essential for each country's own economic possibility and also, given the sheer size and the scale of both U.S. and China, so the actions they take against each other will have global ramifications. So they need to be also mindful of their global responsibility to be sensible, to be reasonable, right? So that's kind of my hope.
What about from the side of Beijing? Because, of course, as I just said, that big bargaining chip, but their main point of leverage is the rare earth controls, and those effectively remain in place. It's something that has caused a lot of issues with other potential or other trading partners, like in Europe, for instance. Do you think that that's the right move to keep those restrictions, or does China also risk being labelled essentially what it's saying of the US, that they're an unreliable trading partner?
No, I don't think it's China's intention to have worldwide control over rare earth, given that China's central role, but also the central role of rare earth in the global economy. Right? I think it's more like a messaging, okay? Because over the years, particularly led by Washington, but also European willingly participate in this whole technology blockade against China, particularly with the high-end semiconductors. Not only the semiconductor per se, but also the equipment making semiconductors, which is up to the ASML, right? So Europeans have been cooperating with Washington in this blockade. So China, basically say, enough is enough. We have, guess what? We have some leverage too, right? Rare earth is one of them. So it's more like just in the wake of the summit, and China want to send a message, okay, to all parties involved. So now with the truce reached between Washington and Beijing, I don't think any issue standing in the way between Brussels and Beijing. I believe is not intended, to harm European multinationals, businesses, and also obviously Australia and New Zealand. That's not the issue. I think it's more. I would say this whole thing is more about the U.S. and China. So, and hopefully now they realize each other are still, at the end of the day, divorce is a very messy, costly outcome. Let's find a way to live together, to do trade with each other.
How do you think China's economy is holding up in this environment as well? What's your perspective on what we're seeing in terms of the economic data?
Well, in light of this, escalation of trade war and also technology financial war, the mounting uncertainty facing Chinese businesses, investors, and even average consumer, actually, Chinese economy has been holding up surprisingly well. Actually still quite resilient, right, against all odds. So this, again, just due to the fact that Chinese economy is not a small open economy, it's very big, very diverse. And also over the years, the whole economy become a bit more resilient, right? So that's reassuring. But, the key for China to be able to sustainable in its economic growth is get the domestic act together, particularly, domestic demand, private consumption. China needs to get it right? And then obviously continue innovation. So with the very strong, robust consumer demand and with the continued strength in innovation, Chinese economy will do very well, not only in the short term, but also in the mid and long term.
You're really on the messages of the fourth plenum, because they were the two big takeaways, lifting consumerism and then also pushing that self-reliancy or self-resiliency in the tech sector. On those opportunities, so that we see in tech in particular, which sectors are you most interested in China today?
Well, so China is not just a one-pony trick. It's like the U.S. China generally, has become a major global innovator across the spectrum. AI, right? That's what all we are focused on. So China is becoming strong leader with tremendous potential. Climate tech, energy transition. So China again is a global leader in renewables, EV, batteries, and next gen energy infrastructure. Then third is automation and robotics. Again, so there are a lot of exciting, really. I was just in Shenzhen, Guangzhou over the weekend, and I've met a couple of founders, and they are doing really cool innovations, in robotics. So I think these are three areas, but by no means opportunities are confined to these three areas, but these are obvious areas China actually leads, but also there's a lot of momentum and there's a lot of really high-quality companies.
Thinking more broadly, but about momentum, the momentum has been very strong into AI across the board, but you're at the point where we've been, of course, talking about the risk of an AI bubble now for weeks, if not longer, months. But do you see that risk of an AI bubble, and what would it be to cause that bubble to burst, or do you see sort of a slow deflation instead?
I think it's understandable why we're all also so excited about the AI. The promise, the breakthroughs, and the potential application across the wide swath of the economy and the society. But we also have to learn from history. Just because this is foundational new technology breakthrough doesn't mean every tree will go into the sky, right? So it's clearly right now there's just so much capital blindly chasing AI opportunity, and the valuation in some cases are really decent high. So we have to be somewhat cool-headed, right? So we have to remind ourselves the last .com bubble. Yes, internet is a real revolution, but many .com companies actually went bust.
All right, well, Fred, thanks so much for joining us this morning. Dave, that was Fred Hu there, the Group Chairman and CEO of Primavera Capital, talking to us from down at the Hong Kong FinTech Week 10th Anniversary Festival as well.
It's already been 10. Wow. Okay. Belle, extremely busy there on the ground. Yvonne will be joining her shortly as well in a couple of hours when she's done with her other big event taking place. If you missed all of those conversations coming up, whether that's Belle, the ones we've had here in the studio, where Yvonne is, of course, at the exchange, you can check out TV Go for our Bloomberg clients. Scroll back. Of course, just have a look at what you might have missed and what you want to catch up on. Of course, this one was the one we just took place here with Annabelle there, with Fred Hu at the FinTech Week taking place here in Hong Kong. Right, an update from Pony AI is said to be pricing. So based on our sourcing, the company said to be pricing its listing here in Hong Kong. It's debuting this week at 139 Hong Kong dollars a pop. This is one of many big names that are set to debut here this week. In fact, if you're curious what that list looks like, you have this massive debut today, 108%, last week 110% on Mining Lamp or Meaning Lamp. Sarah's Group is on Wednesday, and of course we talked about Pony AI, that is towards the back end of this week. So in other words, we got you guys covered as far as this story is concerned. Plenty more ahead.
They understand what's going to happen, and he has openly said, and his people have openly said at meetings, we would never do anything while President Trump is president, because they know the consequences.
That was President Trump talking about Taiwan in that interview aired by CBS News on Sunday. Now, speaking of Taiwan, on shows today, David Daokui, a former PBOC advisor, in fact, talked about the possibility that might actually come up in the foreseeable future. Have a look.
Fundamentally, the most important progress for both sides is for the U.S. to recognize China as an equal peer, as an equal partner. On the issue of Taiwan Straits, this is by far the most important issue or biggest concern of the Chinese side. So I think it is not unrealistic that under President Trump, the U.S. administration, as well as the whole U.S. Capitol Hill, make some new rhetoric about the Taiwan succession issue, which is the big concern of the Beijing side. And in return, the Beijing side will cooperate with the U.S. on the issues of Ukraine, will agree to be more proactive in pushing Russia.
Yeah, that certainly throws a story forward following the agreement on several key issues going into the weekend. The White House, in fact, says China will effectively suspend the implementation of additional export controls on rare earth metals and also terminate investigations targeting U.S. companies in the semiconductor supply chain. Min Lo, our China correspondent, is here. We're getting more details, Min, on what the two sides agreed on based on this sort of, I think it's a fact sheet coming out of the White House.
Yeah, a fact sheet from the White House saying, listing all the things that the two sides agreed on. And of course, there are the lower hanging fruits like fentanyl, like soybean purchases, like the shipping levies that were reached. But also, I think the biggest win for the U.S. this round is really the rollback of the export controls from China by at least a year. And we're talking about not just the actions that they had imposed starting from October this year, but also the ones imposed in April this year and in October of 2022. So what this means is that general licenses will now be issued for rare earths, for the likes of graphite, antimony, gallium, germanium, and the like. So it's a major victory for U.S. national security. China also agreeing to end those investigations into U.S. chips firms like NVIDIA and Qualcomm, and also agreeing to facilitate the resumption of shipments from the Chinese unit of Nexperia. That's a Dutch firm that was seized by the Dutch government because of the expansion of U.S. entity list rules. But this is where there has been a little bit of divergence. The Chinese Commerce Ministry released a statement specifically about Nexperia, saying that this disruption to supply chain was caused by the inappropriate intervention of the Dutch government into the internal affairs of a company. And so China says it will monitor the situation and assess the situation and loosen those controls accordingly. But as David Lee said, it seems like he is pretty hopeful that some of the more longer-standing issues could be discussed in future talks.
Yeah, within reach. Now, the Chinese side also met with their hosts, of course, the President Lee out of Korea. What took place there? What was achieved between those conversations?
Yeah, and that's a very important meeting because it's President Xi's first trip to South Korea in 11 years and the first meeting between the two presidents. And President Lee was saying that this is a reset of relations. President Xi saying that China is willing to deepen cooperation with South Korea. And of course, this is coming as President Lee has been taking quite a different stance from his predecessor, Yoon Suk-yeol, right, who has been leaning more towards U.S. and Japan to counter China. But President Lee has been taking a more restrained and more balanced stance. And one of the things the two sides discussed was the expansion of cultural ties. And this is a very interesting clip because here you can see the two sides sharing a laugh. President Xi was basically introducing some of the gifts that he's sharing with South Korea. And on the table, you can see 2 boxes of Xiaomi phones. And President Xi...
Oh, there they are. Okay.
Yeah. And President Xi asked him, should he be concerned about security issues with the phones? And President Xi said, well, check it for any backdoors. And you can see them sharing a laugh over that. But the big outcome here is really the expansion of cultural ties because remember that South Korea has been facing this informal ban in China since nearly a decade ago when South Korea started hosting the U.S. nuclear missile system, which China sees as a threat. And according to a South Korean lawmaker, President Xi appeared open to the idea of hosting a K-pop concert in Beijing and even asking the Foreign Minister Wang Yi to follow up on this. But the Presidential Commission of Korea is saying that these are, comments, casual comments at a diplomatic meeting. Don't take it too seriously. So we'll have to see whether it really leads to more loosening of the rules when it comes to K-pop in China. Yeah,
well, I guess you'll need to catch Blackpink. I think they're coming to Hong Kong, is my understanding. You don't know anything about that, no?
No, I'm not a Blackpink fan.
Okay. APEC 2026 is going to be held in Shenzhen, I believe. Yes, that's right.
Yes.
Yeah, there we go. So something to look forward to, if not Blackpink. There we go. Min Lo, our China correspondent there. Okay. All right. I just saw something. We might tell you about it in a moment. In the meantime, though, let's get to some other world news we're tracking this morning. U.S. Defense Secretary Pete Hegseth has called on Southeast Asian nations to strengthen cooperation and counter Chinese aggression in the South China Sea. Speaking at a meeting of ASEAN defense ministers in Malaysia, Hegseth urged the group to develop joint capabilities to address threats. Now, he also raised concerns about China's naval activity around Taiwan during a meeting with his Chinese counterpart, Dong Jun.
That China's behavior toward its neighbors and the world is a wake-up call, which it is. Share examples of intimidation, harassment, and illegal activities occurring within your sovereign waters and across the South China Sea. Unfortunately, in the months since then, China's destabilizing actions have only decreased.
China has criticized Japanese Prime Minister Sanae Takaichi for meeting with Taiwanese officials on the sidelines of the APEC summit that recently took place in South Korea. Now, Takaichi posted on X about her dialogue with Taiwan's presidential advisor last week and said that she looks forward to deepening cooperation with Taipei. China, for its part, called Takaichi's actions egregious and accused her of hyping the meeting on social media. Lots more ahead. This is Bloomberg. Welcome back. You're watching The China Show. Before we wrap up our coverage today, here's an insider look at what happened this morning. So it's generally a quiet session. As we were prepping the show today, this statement came out of New World, and it sort of had us semi-scrambling to figure out what was going on. Our understanding is New World Development, based on that exchange filing, says it's issuing now close to $2 billion in securities and notes as it seeks to improve its debt profile. For more details and maybe the reasoning behind this, Trista Law, our China credit reporter, is here with us to just help us understand. So what are they doing exactly, and why are they doing it?
Well, it's definitely they try to improve its liquidity and try to strengthen its financial position, right? And with this exchange offer, they will offer up to 1.9 billion notes for as an exchange for the existing notes. Okay. So that's why. The bondholders, it's their time to process this plan, whether they should, accept it. And analysts are telling us the plan is actually decent, but the company is asking the bondholder to forfeit some accrued interest. And there's a lack of intel about the equity funding, so which are, disappointing somehow. And analysts are also telling us it could be the purpose of this plan could be also to reduce the book value of debt, and then later on the company can also coming back to regroup the bondholder classes and try to rule out another debt restructuring, more holistic one, debt restructuring plan. Okay, so this is just one of the steps of potentially many more in the future along these lines. Can I just ask you what's happening with bonds of Vanco, because I think we're seeing some substantial declines there. Yeah, so over the weekend we saw the filing about Vanke's biggest shareholder, Central Metro, is asking Vanke to provide a collateral for its unsecured loan. That loan could be over 20 billion yuan. So it's the first time they are asking for those collateral, and the shareholder also said if Vanke failed to comply with that, they have the right to demand the repayment. So that's why we saw Vanke's bond plunge a lot. I think investors are processing it, whether it's a shift for Shenzhen Metro's attitude about their support to Vanke. Okay, Trista, fantastic. Thank you so much. Trista Luo, there, our credit reporter on the two stories today on New World and also on the big developer. Okay, let me just be very careful in how I phrase this just to avoid speculating. So we don't know a lot about this next line that's about to flash on your screens. TSMC plans to raise prices by up to 10% next year. That's according to a report, and we're trying to still ascertain the details of that. As things stand, we're not really seeing any, if at all, market reaction to that. We'll get you more details once they do become more clear as far as this is concerned. Okay, before we wrap things up, a look at China AI applications here on the back of this massive move up. Visual China, one of the best performing stocks here, by the way, on the back of Tech Pledge. Gold stocks are on offer following the gold news on the weekend, the tax rebates, and the casinos also coming up on your screens, having a very good session here today. Plenty more ahead here on Bloomberg Television.